All right, can everybody hear okay? Are we back? Believe it or not, great. Yeah, I've been on a hotspot on my phone, which has been a terrible connection all morning. But believe it or not, the internet just came back just a few minutes ago. So just in time for this webinar. Let's get started. So welcome everyone. Sorry for the short delay, but let's jump in and get started. So what we do here in these webinars is we cover one strategy, one rule-based strategy, supply and demand, identifying where banks are buying and selling in the market so we can buy and sell there also. So one strategy, any and all markets, any and all financial purposes. So short-term income trading, right? If you were looking for daily income, weekly income, uh, longer-term wealth, building wealth, protecting wealth. And because of my internet issue this morning, everything's been very slow. So I thought maybe what we would do is instead of, normally I come to you with a lot of trading opportunities already planned, and all you have to do is kind of listen and take those and all that. But I thought today what we would do instead, I do have a few of those, but we would run through the process of identifying these opportunities and taking them together. Does that make sense? Almost as if I was just starting out early in the morning, scanning the markets, finding opportunity and all that. So if you have any questions, just let me know. As far as the title to today's session, Trading the News, I'm going to incorporate that. I had a whole thing planned for you, but we'll do it another time. But I'm going to incorporate that into what we do here today. So make sure you understand that when it comes to news and events and economic reports and all that stuff, all of it, the stronger the news, the stronger the opportunity for us and our strategy. Now, what do I mean by that? Well, like yesterday, we had some news, right? Well, what that did, for example, if you're looking at the charts here, okay, that news came out yesterday, which quickly brought the 10-year note, okay, right up to our supply zone. Okay, there was demand for U.S. bonds, the 10-year note, whatever. And you don't even need to know what the news was. It doesn't even really matter. But that news came out, and prices shot up. Now, why did prices shoot up? Help me out here. Why did prices, for example, in this market shoot up? Why did prices in the dollar, decline? Let me pull up the dollar for a minute. I want to make sure you understand this concept, and then we'll go in and find our opportunities. Right? Why did prices in the dollar shoot right back up into our supply zone? Remember, we've been going over the supply zone for weeks here. We went right into it yesterday and fell again. Why does that happen? Well, let's go back to our bonds. Here they are. If news comes out that is positive for, meaning the news comes out, people are going to want to buy into the bond market. If it's really strong news, you're going to have lots of demand that comes into the market. All of that demand is going to force prices higher because there's not enough supply, right? At the price when the news came out, wherever that market is, like this one, there wasn't enough supply at those price points to fill all that demand or all those buy orders coming in to the market. So that forces price higher. It's not like someone decides where the market's going to go, right? It's all a numbers game. So if it's really strong news and you have lots of demand, where are the sell orders that are going to be able to meet that demand? Those are our supply zones and demand zones. Does that make sense? What I'm always trying to train your eye to see are significant supply and demand zones, meaning price levels where you have a huge imbalance. There's lots of unfilled sell orders, lots of unfilled buy orders. Does that make sense? Okay. So that's why most of the time, if not all the time, when big, strong news events happen, you see prices shoot to our levels and then turn, right? And that's when prices get to our best levels because they have to. There's nowhere else for price. Price has to go there to fill those orders. That's the whole point. All right. So we're just coming out of this, so we might as well start with the 10-year note. We're just coming, this is a level we went over if you were in my YouTube session 2 days ago. This is the level we went over there, and prices went into the level, came right up to the middle level, and are now falling and drifting lower, but we're pretty close to that price point. So 119.19 in that area, 119.20. If we get it, if prices go up a couple points, you can still re-enter that position. A target for this opportunity, okay, when we find our opposing demand zone, and by the way, if you have any questions, just put them in the chat. I just looked back, Alexander, I see yours. I'll address that in just a second. So when we look at current price, our nearest opposing demand zone, okay, is right here. So let's put our little level in here. All right. Now, to execute the strategy with the best chance for success, you want to make everything mechanical. As much of this mechanical as you can. In other words, no thinking. Take yourself and your thinking out of the equation. So our profit target certainly depends on where the opposing demand zone is, but we don't want to use the opposing demand zone as the profit target. Why? Because there's competition to buy here. We don't want to try to buy where there's competition to buy. We'll have a hard time getting filled. So we always want to get out before that. Okay. So what you want to do mechanically is identify whatever this distance is, pick a number, a percentage, which is something less than this available profit target or profit zone, and take that. So I tend to use 80% for no rhyme or reason other than it's less than 100, and I've just gotten used to it. I'm just going to eyeball it here. I always go in and find out exactly where it is, but we don't need to waste our time on that here. Okay. Let's just call that 80%. I just want to make sure we get through enough markets and examples and all that. Okay. Make sense? Does that make sense, everyone? Anybody have any questions? And of course, our protective buy stop is just above the level, and we just execute the trade like a robot. I just want to check something here. Okay. So I'm going to put our a red line just above the level, and I'll show you how we do that in just a second. That would be our protective buy stop. Okay. And how we figure out exactly how we figure out where to put our buy stop. So the top of the level is 119.25. Okay. And there is, I'm just going to put it 2 ticks above the level. Now what we normally do is I'll go down to a smaller time frame, and we'll look inside this area right here. And you'll usually see a little supply zone right up there, and we'll put the stop just above that. But typically, a minimum price point or 2 is plenty if you get your supply and demand zones right. That's what most people get wrong. Okay. Any questions, comments? Alexander, I see your question there. Just before started on one of the videos, you mentioned that the mornings you do live trading members. Oh, yeah. So I do those. I've been doing those for a long time. I can probably get you more information on that soon. I will probably be doing one of those tomorrow, and those are on at least for right now, they're on YouTube. Okay. All right. But I've been doing them for a long time, not on YouTube. But we'll probably do one tomorrow on YouTube. But you'll more information on that a little bit. Okay. So that's the 10-year note. Watch for that. Oh, and if there are any markets that you want me to look at this morning and want me to go over, just let me know. Happy to do that. Not a problem. Okay. And we can look at any markets for daily income if you're looking for day trades. We can look at Larger time, I can, if you're looking for daily income, weekly income, longer term wealth, just let me know in the chat. All right. Okay. Let's keep going. So let's come down to the euro. Let's look at the spot euro. Is anybody, what is everybody trading this morning? What are you guys trading today? Dollar CAD? Yeah, we'll look at that. We have something going in there ready too. All right, let's look at the, I'm sorry, let's go to the euro futures right here. Okay. So you start with the larger time frame. Again, just like the dollar, we see that we have a demand zone down here. And I know we've gone over this one many times. Let me just get it in here for you. Okay. All right, so any push lower, notice we just keep touching this level and turning. That suggests demand for euros, supply for dollars, right? Makes sense? Just be aware that the profit zone here is limited, at least in the short run. Okay, so the euro is very likely to stay inside this range, right around 116, to 112 and a half for the near term. Okay. Now, anybody looking for some daily income, some daily trading opportunities? I want to really kind of mix it up today and show you how we do these. Andrea, yeah, when the profit zone is that small, I'll either stay away in the forex markets. I'll stay away from those trades. But if I'm looking at stocks or ETFs and the profit zone is that small, as long as they're quality supply or demand levels, I'll do an options position around them. Okay. All right. Let's go down to a 2-minute chart. I want to show you some day trading opportunity. All right, so take a look. One level that we need to keep an eye on here is this whole area right here. I can tell you the level that I have planned to take, we're looking at this one right here, but the level that this morning I was planned to take, I will still take it again, is this 114, I believe it's right around 114.70. Let me see. Okay. This right here. So let me actually go down to a smaller time frame. A lot of people don't know that I do this, so you may not have seen me do this before. But take a look. So let's scroll back. Hang on, that's too far. And let me do this. So, so you don't make a mistake. It's always good to put a horizontal line at the highest price here, and then scroll back until you hit price. And right, so there's no supply here. So let's move this higher. I know the level I'm looking for. I just want to show you how, the smartest way to get there. Okay, none of that is quality supply, so we move higher. And you're going to see it right over here. See that? See that one right there? Now again, this is something I don't normally, actually I never do this on YouTube or any webinars or anything, meaning going down to this time frame and pinpointing. Now there's a reason, there's other, so this is like the supply pattern, right? Drop, base, drop, it's fresh, quality level, all that stuff. But there are other levels that look like this that are closer to current price, and you know, like that one, and there's other ones along the way. This one has a couple things that make it much higher quality than the others. So I will certainly look to take that trade with a stop a few pips above the level, a few ticks above the level, and let's leave that one alone. So that's 114.69. Now again, I know we're below that at the moment, but that's okay. All right. So again, notice we have this level here. Very good chance that this area, prices turn in this area as well for a little day trade. Actually, I say a little day trade, but there is room for price to come all the way back down to here. Let's go back to, let's put this on another higher time frame again. There we go. Okay. You do have room below. And your initial profit zone has already been opened up down to about what is that? Oh, 130 or 1380. Okay. And then on the demand side, oh, 11380. Let's see. Oh, I just had an order in to buy right here and I missed it. How did that happen? 13. I had the order at 78. Okay. So I was looking to buy it right here. I still might. Let's just put this in just in case. I'm looking at my other computer screen next to me and I see it didn't fill. Not sure why. Well, it looks like it only got down to, okay. Well, it is what it is. So we'll leave that alone. So little small time frame day trading setups in the euro. We're looking at the euro futures there. Yes, we can look at the dollar Canadian. Were any of you in my YouTube session the other day? That was 2 days ago. This was a supply level in the dollar Canadian. And if you're in this one, we can go over a target and all that stuff. If not, that's okay too. But prices turned at that level, and now it's moving lower. So what do we do from here? Okay. Well, again, we always want to start with our larger time frames. Okay, there's one level missing here. Okay, so be aware that this 134.30 is above current price. It's not that far above. I'm sorry, 134.30. So it's just above current price. Notice price almost got there and didn't. What does that tell us about the supply-demand equation here? Big imbalance, really big imbalance. Okay, banks are selling this currency right here and have lots to sell. Now, I always say that. I keep saying that, but how do we know that? Well, if that statement was not true and supply and demand were equal here, wouldn't price just keep trading sideways? It would, but it couldn't, right? Why couldn't it? Because supply greatly exceeds demand. The big smart money is selling here and has a lot to sell, and there's still orders left. Okay. Same thing down here, only we have a pullback already. Make sure you understand that every time price comes back into the level, some of the demand at the level is filled, meaning the next time down into this level, you're likely to go through it because you went so deep into the level the first time. All right. If you have any questions on any of that, just say so. Okay, let's keep going. Now with that, so we come down to our 4-hour chart, we see we came off our supply zone and are falling. We already know that. Looks like most of this demand here is gone. Orders are filled, which should allow for prices to come down further. They could certainly move up because you don't really have supply here, but they can move further, lower, and we will come into some demand around 131.80. Okay, 131.80. Isam, it is, but at higher prices, not right here. You wouldn't want to do that right here. Okay, so you'd want to sell it if prices went back up to supply, buy it if prices go down to demand, but you can see right now we're pretty much in the middle. Make sense? Okay, well, let's keep going. So let's go down a few time frames. So now everything I just said is based off the opportunities that we found looking at the larger time frames. Okay. But when we come down to the smaller time frames, right, we see supply zones show up and demand zones show up that we won't see on the larger time frame. So we want to watch this area. Let's just go down to a smaller time frame and investigate a little bit. Okay. So we can blow the chart up here. Andre, I'll go back to that 131 in a minute. Yeah, so you want to kind of watch this area here. The Yeah, it's okay. There's a lot of trading activity in here. So you see up here, this supply zone, how it worked? It worked well because the picture of supply here suggested there was a lot of many unfilled orders up here, where this area did not suggest that, doesn't suggest that, because prices could still turn, right? Not a problem, but there's a lot of trading activity up here. If there was such a big supply-demand imbalance there, you wouldn't have all that trading activity. Let's keep going. Now we're looking at a very small time frame chart. A level that I would take a trade at, and probably will, if I don't forget, is combining those two areas right there. So selling short 133.45 with a stop at 133.58. So 45 to 58. Now we're nowhere near that, so we're not going to spend much time there. Andre, you were asking about 131. I'm not sure what time frame you were thinking, but maybe it was this one. Probably wasn't this one. Maybe you're looking at the 60-minute. Oh, this? Yeah, no, we wouldn't. No, we would not. I'm glad you brought that up because we would not call that demand. You're likely to get maybe a little bounce there, but that is not demand. We would not call that demand. Okay, so demand would be lower. Two reasons. One, this is not the pattern of demand, right? This picture doesn't represent demand. Number two, look at all this trading behind it, higher and lower. If there was such a big supply-demand imbalance in here, if banks were aggressive buyers of this Forex market in here, the picture would not look like this. It would look very different. Okay. All right, let's keep going. Any other markets you want to look at? If not, I can certainly I can certainly keep walking through the markets I have planned for you here. Let's just go back to our 10-year, see where that's at. All right, is it not moving? Let's go over here. Yeah, Carlos, that's part of it. Sure, we can look at the NQ. All right, now the market's open. Prime time. Good stuff here. So let me, I don't know if I've ever shown you this, but so I have an algorithm that I built and been, looking at it for quite a long time, whatever. But I'm going to pull it up here just for a second because this will speed our analysis up since the market is open. And if we want to look at the NQ, let me just go over here and see if the what the NQ has. We've got that level there. Let me go over here. There's a couple opportunities I want to take a quick look at. Click around. Let me go over to the Forex markets. And let's see what we have. Okay, so this just tells me what's close to meeting entry. So there's the New Zealand dollar. Let's go take a look. Actually, before we go over to the New Zealand dollar, let's spend a few minutes on the NASDAQ. So the NASDAQ is sitting here. If you're looking for some short-term trading opportunity, we'd want to see prices go above yesterday's high. All right, so let's put a horizontal line in here. And let's do that. Notice prices just drifted down overnight to the demand zone, and now they're rallying higher. So we see that is not supply. There's plenty of room up here. Yeah, we really don't have any significant supply until, this is probably going to be a problem if we should happen to get up here. That's almost 100 points higher than where we're at. So we don't need to spend time on that at the moment. Okay. But if you do see a significant rally, just note that about 100 points from where we're at right now is where you're likely to find some supply. What that tells us too is if we do get some pullbacks to demand zones, we can buy those, right? Like this one right here. Okay, I know we've already been there, but there's really not a whole lot to stop the market from rallying. Let's go to the S&P and we'll probably see the same thing. Okay, let's go down to the smaller time frames. All right. So this is going to be a challenge for price, and this is not that much higher, sitting just above 27.55. Okay. And then again, if new demand zones developed, we'd look to buy those. Right. But where price is at right now, it's not good odds to short it like right here. Okay, we'd want to get into a supply zone so we can really manage the risk. Doesn't mean prices can't fall. We just don't have any quality supply or demand zones to deal with here. Any other markets you want to look at? Otherwise, I will continue to go through my list. Let's go over here. There is now I want to go to the Dow Mini for a minute because I remember there being a level here. Let's take a look. And again, if you have any other markets you want to go over, just let me know. Not a problem. Yes, so above all these highs, oh yeah, this level's not that far at all. So this is an area that a lot of people are not going to see, which is good for us. So about 55 to about 90 right here. I looked at this area this morning. I know it looks far from current price. It's actually not. Yep, we'll look at the, so watch that area in the Dow Mini. Let's see if price can get up there. All right. Now, having said all that, If we get a small time frame supply zone to develop, we can take that too. And that's why I'm watching the, the smaller time frames here. Okay. Let's again, so we had an opportunity here in the New Zealand dollar. So yeah, the algorithm I have finds the supply demand levels, but we want to take this one that's just a little bit higher. So let's go to that. And there's some old levels in here. Let's get rid of those. And if I blow this up, those are some really good levels right there. Yeah, so we're looking at this area, this one right here. Okay. This is a nice level here, but it's already working. But let's see how deep prices went into it. Because this is an opportunity we'll probably be able to take, more than once. There's that one. And there's that one. Yeah, no, I noticed that, Carlos. Okay, so I'm glad we put in this lower level because that is it's still a fresh level. So if the New Zealand dollar does go a little bit higher, this is a pretty big time frame. So we're good with this in the spot market. Okay. All right. That is, so you can see the prices there, right? That's about 68.90 and then up around 69.35. All right, let's go to your New Zealand Canadian. And oh, by the way, nice big profit zone here. Look at the profit zone. Looks outstanding. You'll probably have a little bit of trouble here, but not a big deal because if prices get down to here, you're probably going to have a supply zone left right over here. Okay. All right, let's go to the New Zealand Canadian. There we go. Were you looking at a level here, or were we just going to find one? And either way is fine. Gotcha. Daily supply. Okay, let's take a look. Well, you're running into this, but I don't call that a supply zone. Could prices turn for they could, but a fresh quality supply zone is not that. Remember, pivot highs and pivot lows are not supply and demand zones. Those are pullbacks into supply and demand zones. So it doesn't mean prices can't turn from those levels. It certainly can. Okay, just remember that those levels are not, they're not fresh. Okay, so they're just lower odds. Yeah, we can certainly look at the weekly. Let's do that. Yeah, yeah, same thing. Okay, but let's go back to the daily though, because we'll be able to find some areas. So what we'd want to do though is look above that. So up here we have some supply levels, but I would say you're so far from that we probably don't need to spend time on that here. You have some nice supplier demand, but in those larger time frames, there's not a ton right there. So I'd say that the right here actually. Okay, the one we just went over, the New Zealand dollar, I'd say this is a much better opportunity in here. Okay, we just need a little push higher, but shouldn't be a problem. Yeah, let's go back to the S&P. What we do have now in the S&P, well, that's the wrong workspace. What we do have now in the S&P, if you look at the somewhat larger time frames down here. Okay, let me put volume on this chart. And the reason why I'm putting volume on this chart is not because I care about volume. It just helps me quickly see the day session versus the night session, if that makes sense. Okay, so notice we do have some strong volume. I'm looking at the times here. So now we have some larger time frame demand below current price. Let's get that area in here. And again, I always want to make sure that we have, that's weird. Okay, so I'm checking the times here. Oh, I'm sorry, wrong level. There we go. I just want to check the times to make sure. Yeah, that's not the level either. So let's get rid of that. We're going to have to go down a time frame just to take a look inside there. So let's do that for the S&P. And let's just look at the 60-minute chart. I would say, yeah, that's what the chart is suggesting, Adriano, yes. Okay. Yeah, so we need to look inside there, not on that time frame. Yeah, so we do have a nice level right here. A lot of people are going to see this level, so I would be a little careful with it. I would absolutely take this trade. I just wouldn't use full position size. I would keep the risk close to a minimum on this one. Or use full position size, but put your stop below the low. And that's going to be a big stop for some people. That'll be, well, it'll be about 9 points below that. Okay. All right. So we've got our, whoops, that's the wrong market. And today what I wanted to do, partly because of the internet connection issue I had this morning, I thought it'd be better to, instead of going over lots of markets and just handing you trade after trade after trade, dive a little deeper and explain, why we do what we do. Does that make sense? Okay, let's go over here to the euro. Oh, let's go to, we were looking at the euro futures, sorry. All right, so don't forget, we have this little zone up here. If this is the euro, whether you're doing the spot euro or euro future, same thing. Okay. We're right in the middle though, but this is a 2-minute chart, so price could be up here or down here in no time. And don't forget the 114.69, and then of course the other markets: the New Zealand dollar, Canadian dollar, S&P and NASDAQ, that Dow mini supply zone. I don't think we got close to that, but we could. Right, so now knowing that you have all that room below, especially in these equity index markets, you can look at the small time frames, and when a new supply zone develops, and it usually happens, it can happen really quick, we could take that. The profit zones are big on the upside and the downside, in the equity index markets, S&P, NASDAQ, Dow, you name it. We also spend time looking at the dollar, right? I think that's the first market we went to. We noticed, again, prices are just in the supply level that we've been looking at here for a few weeks at FX Street. And then we do have some demand, a little bit lower, just around around 96. Right up in here, 96 to, yeah, right up in there. Okay. Whoops. Yeah, Santosh, that's a great question, but that's a really that's a big question. Tough to answer. Um, Tough to answer that here, but yes, I mean that's what we're kind of been practicing and going over this morning. So there's very specific criteria. It's not a lot of criteria. It's not complicated criteria. It's very simple, but yes, it's very and once you have it, you need to just be mechanical, right? Okay. All right. So I just looked at the clock. I think we're out of time here, but we will have another session coming up, and we'll get things kind of back on track. So apologize about the little internet issue here today, but I think we went over, quite a few really quality trading opportunities. Yeah, you know what? So if you subscribe to my YouTube channel, you'll get some of that tomorrow. Actually, I'm almost positive we're having a session tomorrow. And then the real good news is we're going to be doing a lot more here at FX Street. So you'll see a plan for that here in FX Street. We'll be doing webinars every twice a month. But we're going to build more. So that's all coming really soon. And if you have any questions, you can always, you would just search for my name on YouTube, and then you just need to subscribe. But I don't have the link handy, otherwise I would post it for you. But you'll get everything here at FX Street too. And you can always email me at sidentrader@gmail. That's sidentrader@gmail. And then, of course, there are many postings of what we do and how we do it here on FX Street. All right, so we'll see you soon. Thanks, and have a great day.